Steve, welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
Janine, this podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Steve, today we're discussing a recent warning from the Office of the Superintendent of Financial Institutions, or OSFI, about the risk of mortgage payment shocks to Canada's financial stability. OSFI's annual risk outlook highlights that more than one-third of Canada's mortgages, about 36%, are set to renew by the end of 2026.
Janine, that's a significant number, Steve. And despite the interest rate reductions of 200 basis points since June 2024, many borrowers are still facing higher payments upon renewal. It's really concerning, especially for those who have planned their finances around lower rates.
Steve, absolutely, Janine. A report from Equifax Canada found that 6% of borrowers who renewed in 2024 saw their monthly payment increase by $500 or more. In Ontario and British Columbia, this figure was even higher, at 10%. Fixed-rate mortgage holders and those with fixed payment variable rates are particularly vulnerable due to their initial low borrowing rates.
Janine, it seems like these borrowers are in a tough spot. Even though falling interest rates are helping to soften the payment shock, there is still a lot of financial pressure. It is important for borrowers to be aware of these changes and seek advice if needed.
Steve, OSFI has been raising concerns about these risks for a while now, especially the potential for negative amortization and payment shock. They are stepping up their oversight of mortgage lending risks to address these issues.
Janine, and it's not just about mortgages. OSFI also pointed out pressures in the condominium market with a backlog of completed condo constructions leading to oversupply and declining demand from investors and homeowners. This adds another layer of economic uncertainty.
Steve, OSFI is implementing measures like enforcing loan-to-income limits and adjusting approaches to mortgage renewals. For example, they're removing the requirement for uninsured borrowers to pass the minimum qualifying rate when switching lenders for a straight renewal, which should give borrowers more flexibility.
Janine, these changes are crucial for borrowers who might otherwise struggle to find competitive renewal options. It's a challenging time, but proactive measures like these can help mitigate some of the risks involved.
Steve. Now, let's turn our attention to the recent decision by the Bank of Canada to cut its overnight rate by 0.25 percentage point to 2.75%. While many professionals initially applauded this move, believing it would improve mortgage affordability, the reality seems to be more complicated.
Janine, that's right, Steve. The cut was expected to bring relief to mortgage borrowers, especially those with variable rate mortgages. However, it has also raised inflation expectations and pushed bond yields higher, ultimately increasing borrowing costs for fixed-rate mortgages.
Steve, exactly, Janine. It's important to note that while the overnight rate impacts short-term borrowing costs, like those of variable rate mortgages, fixed-rate mortgages are more influenced by bond yields. Since the rate cut, the Government of Canada's 5-year bond yield has been climbing, which in turn applies upward pressure on fixed-rate mortgage products.
Janine, and that's where the challenge lies. Canadians traditionally favor the stability of a 5-year fixed-rate mortgage. Now, with rising bond yields, borrowers might find themselves paying more than they anticipated, even as variable rate borrowers see immediate benefits from the rate cut.
Steve. To put this into perspective, a home buyer purchasing a $1 million property with a 20% down payment might end up paying $2,000 more over the mortgage term than they expected. While this might not seem earth-shattering, it's certainly not the relief they were hoping for.
Janine, it's a reminder that each rate decision has a ripple effect. often taking 18 to 24 months to fully impact the market. The Bank of Canada's decision, while intended to stimulate borrowing and demand, might have inadvertently raised the floor on borrowing costs.
Steve, the Bank of Canada has been criticized for potentially repeating past mistakes, such as those made during the pandemic, by disregarding data and acting on emotional fears. With inflation expectations rising, bond yields are moving up as investors seek higher returns to compensate for inflation.
Janine, it's a complex situation, and borrowers need to be aware of these dynamics when making decisions. The central bank's single mandate is inflation targeting, and its actions are intended to maintain a 2-point target with a point of tolerance on either side.
Steve, despite the central bank's intentions, the latest move might not deliver the cheaper mortgage credit that many were hoping for. Instead, it could lead to higher borrowing costs as the market adjusts to the new reality.
Janine, it's certainly a challenging time for borrowers, and seeking professional advice can help navigate these changes. Understanding the implications of rate cuts and bond yield movements is crucial for making informed decisions.
Steve, thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Janine, before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.